Hey everybody, this is John. Welcome to the free video. Let's take a look at a couple of things here. Bigger markets, TLT pulling back. I'm looking to see if we can get that 8 EMA on the weekly chart. Notice that's still pretty far away. We're getting a little bounce here on the 21. It's completely fine to add calls here. I'm going to see if we could actually come down to that level though. This is something where it's just kind of scale out, different things like that. Taking a look at the dollar index. It's been a little quiet. I'm actually expecting it to kind of go into a little bit of a quiet mode here. But the big thing to look at is just oil. A lot of people were asking, the other day, is the bottom in? And, as long as you see, here's the key with this stuff. As long as you see a rally on increasing volume like this, it's going to continue. But as soon as that drops, essentially, because a lot of this can be attributed to short covering, right? Then it's just kind of done. The prevailing trend will continue to go. So how we did this with USO is that when we saw kind of that break, because this thing hasn't broken through the 8 EMA, like it just hasn't in this whole run. I think one time here it kind of poked its head up on fairly apathetic volume, but then suddenly here we're kind of poking through on fairly decent volume. And so we went with that and just did a trailing stop, and nice little trade there. So okay, so now the question is what happens next? And what I want to do here is we'll take a look at the market, take a look at a couple of key stocks. Amazon here acts fantastic. I'm looking for Amazon here to make it to 373. What kind of trade do you do on something like this? The easiest, the safest is either put credit spreads or call debit spreads. You don't, a lot of the questions I got today was, well, what about selling call credit spreads? I just don't really think there's any reason to be in front of a freight train. If you look at this and say, well, I'm going to sell one put spread down here and one call spread down here, I would just sell two put spreads, right? So anyway, or do it at the money, put spread or debit spread, but just kind of keep things simple that way. One trade that I like today, now you're going to look at this and say, gosh, John, you're crazy. I actually like this one and did a call debit spread on this. Let me bring this down here. And the idea with this is that you're looking at this and probably going like, John, that's super extended. Why would you ever be interested in that? And so first of all, of course, it's doing a debit spread. So you're going slightly in the money here, selling it out of the money. So you've got a better than one-to-one risk-reward ratio. And I'm not looking for max profit on this. Max profit would be $20. I actually would be happy with like, $13 to $15. But what I'm looking at here is that, well, first of all, we got a weekly squeeze going higher. Okay, so is it extended? Yes, it's extended. But and that's only 3 dots in. They typically go 8 to 10 bars. We're consolidating on the daily. There's a squeeze there. And then if we drop this down to the 39-minute chart, you can actually see a very beautiful, very clean consolidation. Now, it doesn't mean that this is going to go higher, but I'm looking at this going, well, this is being accumulated, and I'm looking for this to go to 405. So that's the trade I did on it. Again, I'm not looking for this huge move, just that we continue to grind in the direction of all these trends, and that's a position that would benefit. Of course, you could also sell a put credit spread on that as well. In terms of the overall market, so guess what? We're still in the battle. Okay, the battle right now is between the bulls and the bears, and I'm going to expand this out a little bit because we have that daily downtrend amidst the cross section of a weekly uptrend. Okay, I'm still looking for a battle where we come down here and test this level, but we'll see. But we've got a squeeze here on the daily chart, so we could just kind of get this thing going. But the markets are not, they're a little not shaky. Shaky is not the right word. Jittery, and you got to remember too that the two key sectors, energy and financials, are taking the brunt of it. I mean, we've had a nice bounce this week in the financials, but ultimately that's a downtrend. So I would just be careful with your long exposure here. If you are going to have long exposure, have it on the strong stocks, and just be ready to hedge. Okay, and one of the best ways I found to hedge is just looking at intraday charts as an example. If we look at a 78-minute chart here, let's see, 78-minute, and we look at this like on the spiders, you're going to see, oh, okay, that doesn't look like we need to hedge. But I actually find it more useful to look at the futures for hedging. So you can see that the S&Ps here are kind of building a story for a potential hedge. You know, right now, nothing's triggered yet, but if this triggers short, then just as this triggered long and we had, you know, some nice upside movement for a day or two, if this triggers short, I would look for some nice downward movement, and that would mean that would be an opportunity to obviously put on some short-term shorts to hedge any long exposure that you have. Okay. Okay, and as a reminder, remember, Thursday night, free webinar. We're going to be talking about, especially in this kind of a market where it literally is a stock picking market, okay? You don't want to just look at the Qs. You want to look at individual stocks. We're going to be talking about my favorite stock and option scanner that I use every day, okay? This is, the nice thing about this is that this will be, I'll be showing you the setups that I like. You can look for these on your own. And then if it's something that you'd be interested in, just kind of a simple little scanner, I'll show you that as well. But it's essentially, instead of having like, you know, your 10 favorite stocks or your 20 favorite stocks, is essentially looking for opportunities across the entire market. And you can find some literally pockets of gold in those situations that are like, wow, that's just a long setup that I wasn't aware of, or vice versa, a short setup that I just wasn't aware of. And finding the best trades that are in alignment in more than one time frame. I think that's one of the hardest things for people to actually really save time on, is being able to sit there and say, wow, here's a chart where the 78 and the daily and the weekly are all telling us the exact same thing at the exact same moment. That's hard to find unless you happen to find it, versus having an alert, you know, that comes up and says, hey, heads up. And we'll just be going through and talking all about that, and then especially the best time frames to narrow down, and then also what to do if you've got like 20 different choices. How do you narrow it down? Okay, so anyway, first name, email, and this will be Thursday, 8 o'clock Central Time, 8 o'clock East Coast Time, and then that's 7 Central, and looking forward to seeing you then. Simplerstocks.com/scan webinar.